I think as an industry, going back the last 40, 50 years, the growth of pension assets and ERISA and the Employee Securities Act, we've seen a buildup of capabilities in a siloed way. So that picture on the right there to the left side of it, we've built up capabilities that support the trade of equities, of fixed income, derivatives, and they've all been built up in their own silos. And in addition to the technology that's grown up, we've attached operational stacks to manage that individual technology. So that was all fine and well, and the reason why we did it when we did it all made sense. The problem we have now is this notion of interconnectedness or interoperability across both the technologies and the multi-strategies of the investors looking to be both in fixed income, in equity, in derivatives, and anything else, and being able to pull all that together and report out is limited by how we built these things historically. And now you're seeing more of that need for communication and collaboration across investment teams, which means the technologies need to be able to speak to each other, which means the operational teams need to be able to support multiple technologies. And all of this is coming at a time where we're seeing increased pressures on the participants, whether the asset allocators, the asset owner, the asset manager, and firms like ourselves that are built to support them. The beauty of the cost pressures is they will say necessity is the mother of invention. That is driving people to do things that they've probably never considered before. As we look at the idea of the cost of technology, that I suppose it's becoming an old adage now, but the idea that things are moving faster today than they ever have before, and they'll never be this slow again, is driving a lot of that. So the ability to be able to stay current is more and more difficult as the investment increases. And then with that, the consumption of data. So if we look at asset allocators and asset managers, historically, asset managers have been the big consumers of data, and they've been providing out to the asset allocators reporting and information. What we're seeing more now, and there are a couple of factors driving this, we're seeing asset allocators being consumers of that data in much the same way. So there's a confluence there. And I think it's driven by a number of things, but two that I'll call out. Democratization of data. So the availability of that data and access to it is easier than it's historically been. Plus, we're seeing a trend with certain allocators taking on more responsibility for managing their own assets, or at least providing greater and more intimate oversight of their managers. So again, driving a number of different challenges for all of the protagonists, ourselves, the asset allocators, the asset managers.
Sure.
And so it makes for an interesting time.